Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, January 5th. It's 7:23 in the morning as I'm starting the video. Getting a little bit late here, so I'm going to try and zip through this. And for you to zip through it, I really encourage you to run the video at 1.25 to 1.5x to make the best use of your time. I don't think you'll miss any content at all. Taking a quick look at futures, NASDAQ is down about 0.3%. Large caps and small caps are flat. Bitcoin down about 0.5%. On the macro front this morning, we've got ADP, we've got a PMI print, we've got oil inventories at 10:30, and we've got FOMC minutes at 2 p.m. There was a lot of chatter in the trading room yesterday about the FOMC minutes. I mean, in my mind, almost impossible to trade. Who knows what's in there? We know what they said in public, that they're going to start, turning back on the asset purchases, whether there was any dissension or commentary or anything in the minutes. Who knows? And also, even if you did know, you'd have no idea how the market is going to react. So, just know that potential catalyst is out there, and, take that into consideration in your active trading. And on the earnings front, not a lot happening yet. I haven't looked at the calendar closely, but I didn't see anything today. I think it'll start picking up tomorrow, Friday, and then into next week. So, let's zip through this. Yesterday, after a big jump in yields, we had a further rise. That's going to affect your rate-sensitive assets, specifically your long-duration assets in tech. That's going to be a big headwind. And I've titled today's blog post as the biggest loser, Ponzi's and bubbles. Building on that theme we've started over the last couple of weeks, really accelerated yesterday and really Monday, the day I was out, with the big rate jump. And I spend some time on the blog, and I'll hit it quickly here this morning, but the ARK complex, just as a proxy for the bubble and Ponzi names. Of course, you're going to be welcome to drill down for specific names if you care to do that. But as far as the ARK names go, I will give you today the levels to alarm and watch if you prefer just trading a basket of those. So let's get into SPY. We had the fake breakout and then a flash move to the bottom of the box. Yesterday midday, talked about a potential buying point at the bottom of the box. Whenever you're in a trading range, it's always subjective to buy the bottom of the box with a stop just below. And if you did that yesterday, you got, a nice move back up to the top of the box. I mean, that's the essence of a consolidation range. And this fake breakout, as we say a million times, you break out, you don't want to come back into the box, because if you do, the target's the bottom of the box. And that, scenario played out. So today, see if price can break out above 478.50. If it does, you can take it long. SPY has shown some resilience. I don't know if I'd be all that amped up to say, okay, I want to be short at the top of the box. You can certainly do that if you want. If there's some weakness, or a better play, in my opinion, is if you get another one of these moves where you emerge out from the top of the box in the morning session at some point, and then come back in. We talked about the FOMC minutes. We could be hovering here above the box, and then something come out in the FOMC minutes that spooks the market, and you come back in. Then it would be objective to, take that short and look for the bottom. But for a more sustained move lower, you got to break 475, and that's where I would be more interested in a longer term type short, because I think if you break 475, you've got the gap down here at 472, a fill to 471, and then remember our big breakout level was 470. So I would anticipate that if we broke down below 475 at a certain point, the price will want to come back to back test this 470, and then of course we can take it from there. A lot more of the turbulence yesterday was in the NASDAQ. We talked yesterday midday about this big sell bar. Price came down, and then we got a bounce into the close. We got a back touch of this 397.75, 398 area. I think really to take a long, you've got to, if price breaks back above this 398, you can take it long because you've got a prior low here, and then recapturing that would be bullish. But as we've already discussed in the pre-market, we're down 0.3, so that's going to put price, probably down towards the bottom part of this range, down towards 395 or so. And here you can see that reflexive rally off of 393.50. That's certainly a place you want to mark in the chart. Any kind of break below 393.50, and like we said yesterday, not a lot holding it up once it gets below that level. And I'd assume a fairly quick move down towards 390, 389.50, right in that area. So I would be careful on QQQs, and this move here really has me cautious about the Qs, specifically on this chart. But of course, the Qs are an aggregate primarily of the mega cap tech names. So by extension, if you're not all that amped up to be, long the Qs, then that's going to extend towards many of the mega cap tech names. We're going to get into those in a minute or so. Holding up a lot better was IWM. Why? Real world companies, very little exposure to tech. You've got energy, you've got financials, you've got industrials. Those, in my view, are ultimately going to be the sweet spot. Now, this has been a frustrating trade for the last however many days, as its price has consolidated, bouncing in this range between 226 and 222, and we've had a couple of little fake breakouts in price up into the gap, which of course is frustrating in and of itself. You get a break into the gap and you get long, and then you get stopped out, and then it happens again, blah blah blah. I mean, if trading was easy, everybody'd be doing it, right? So you just got to take it for what it is. We've got a nice line of support here right at 224. If you got to move down there, I would take it long with a stop just below, and I would be getting short on a move below this level here at 222.50. If things go to hell in a handbasket and the whole cyclical value trade falls apart below 222.50, I think you get a fast move down towards 219.5. But I'm still constructive on IWM a lot more than the Qs, and right in line with SPY for the reasons that we just talked about. Now, as we get into the FATMAAN names, if you're new to the channel, thank you so much for stopping by. Please hit the subscribe button, the alarm bell, and the post notification button. You'll get all my YouTube content. If you want to go the extra mile, we'd certainly enjoy it if you join our group. You'll find a link to do that in the show notes. All it takes is your email. And then morning, noon, or night, whenever I post something, you'll get it right in your email box. And you'll also get an invitation to our trading room. A lot of motivated, aspiring traders in there ready to tackle 2022 in the best way possible. And it'd be great to have you on board for that. So let's get into the FATMAAN names. Big sell bar went from the top of the channel to the bottom of the channel. Got a little bounce here at 334. For me, I'm not touching this right at the moment. I want to see something, convincing. What is convincing to me? Well, I'd like to see a move over 340, just like I talked about here. Now, certainly 334 is going to be an important downside pivot today. Why? Because that's the prior low. And if you had any kind of, if you were bullishly inclined, you can buy 334, but it's got to hold with a stop just below. And then you're looking for a move up to 340. If you want to take the view that, I want to see a breakout above 340, that's perfectly fine as well. But I'll just say, you get a move below 340, you got to, either step aside or try to play it short. You've got very clear levels below that would be your downside targets. We had a big level here at 327. That was a big level from back in here. I would anticipate that holding. Your last stop or your last chance to save it would be down at 324 if things start, rolling downhill. So right here, we're inside a value range. May see some chop until there's, a bigger directional move afoot. And I would say that would be on a breakout above 340 or a breakdown below 334. That's a $6 range. Certainly if you're nimble intraday and you get a good trade location at 334 and it makes a move back up to 340, just toggling in the range, that can certainly be a really nice trade for you. Apple. Talked about this fake breakout yesterday, pulled back into the range. I think you're keying off of 179 this morning. And as long as it can hold that, you got a shot to move up to 181. And if you got a reacceleration to the upside, if you got a breakout above 181, you can be a buyer there and then look for a move up to 183 at the prior high. That's certainly valid. If there's a breakdown below 179, I think you're going to move quickly to this 177.5 level where there was a lot of support, and certainly any bulls out there want to see this prior low hold because, of course, anytime you break a prior low, that usually brings in more sellers. So be aware of that level. Tesla, to me, it's all about this gap from 1135 down to 1060. We've already had one penetration of the gap that held. We came up, we came back for another touch late in the day that held. B on top of that, and I would alarm it even if you have no intention of trading it. Why? It's an important barometer. It's an important stock within QQQ. And as we'll find out later on, it's a really important stock to the ARKK Invest flagship fund. And that can be a proxy for you on any kind of turbulence within Tesla. So as long as this holds 1135, relative disasters avoided, and there's an opportunity to go back up. If everything gathers itself and this was all much ado about nothing, then there's an opportunity to reclaim levels and go back up here towards 1210. And if you're a nimble trader and you want to be long, you can be long against 1135. You can buy a move above 1150, 1165, etc., all the way up. Recapturing levels from below is a bullish move. Microsoft has really one of the poorer charts within the mega cap tech space. After being one of the best on this big run up to 344, we've had a down move, bear flag, down move, bear flag, down move, bear flag, down move. I mean, you keep doing what's working, and what's working for the last several days are bear flag breakdowns. I mean, there's been several, as I just pointed out. So now, what do we got? We got a sharp move down and a kickback rally into the highest or largest volume over price bar on the chart right here at 330. So how do you play it? I think you play it short against 330. And if you get stopped out, that's trading. But you've got a pretty sharp downtrend in place. You've got the biggest resistance level on the chart right above. And you're at the top of a bear flag. So, I mean, that's about the highest probability risk reward short that you're going to get, top of a bear flag into the biggest resistance level on the chart. That, to me, is a high probability trade. That doesn't mean 100%. That doesn't mean you go all in. That means you get short and you set yourself a stop. And the first move that I would anticipate is a move back down to test this prior low at 326.5. And then if that breaks, then, you're coming down here in the low 320s, if not 319. Amazon, we're trapped in this $125 box between 34.40 and 33.15. Kind of in no man's land right here. I wouldn't do much with it here. I would see if there's a move down to, truly test these lows down at 33.15, and then you'd have a very objective level to either take a shot long or to sit patiently and see if it breaks. But right here in no man's land, I think it's a tough little trade. If you get some kind of a move here from the middle and it breaks out above 33.80, you can buy that and look for a move to the top of the box. But with, I haven't looked at Amazon, so I'm just, talking out of my butt a little bit here. But with NASDAQ down, I doubt Amazon is doing a lot here pre-market. So you might have a little weakness here and then maybe like a quick move down to 33.15 that you can try to buy right there with a stop just below. And, that is a high probability trade because you've got all these tests as support right at that level. And if that doesn't work, then, you're stopped out and you're seeing if there's downside follow through. Google, sell bar, came right down to resistance to test this prior low at 28.70. That's the level I would be looking at really, really closely today. If there's some kind of a down move, if you got a break there, then I would anticipate a quick $20 move down to 28.50 and potentially a lot lower. We talked about Netflix yesterday. This low held, little undercut with a little bounce back up to 592.50. That's a level that you can key off today, but take it long above and potentially short below because you've got a pretty good downtrend here. But as we discussed yesterday, looking at the bigger picture, you got the 200 right here at 579.20. You'll have to decide if that 579 is a target worth shooting for. If you're on a longer time frame, I would just wait until you either can get long against the 200 or see if it comes down here against this big trading range, $90 trading range at 560 if you're looking to get long. But for me, if the 200 breaks, then that would be, for me, kind of a compelling short because you've got a clear line in the sand at the 200 and you got potentially $20 of downside to the first target. That's something worth shooting for. And then you've got an anchor position against the 200. And if this 560 were to break, then, potentially a lot more downside in the cards for Netflix. SMH, big sell bar, but an equally impressive rally. Came back in here to 308. That would have been a perfect place to buy. We even talked about that yesterday in the mid-session update, that was an area that had to hold. And as we've discussed a lot of times, testing the prior low, support is support until it isn't. So in this case, you took a look below, but then they bought it right back up. And so recapturing the prior low from below is going to be bullish. And congrats to you if you got that move. Now, this morning, I think this 312.50 is the line. You can stay long against 312.50, but below, I would be getting short right there. So that, well, first of all, you break 312.50, very high odds you're going to go back to test this 308 again. So that's $4.50 worth of downside. And if you set your alarm there and set your stop just above, that's a pretty nice risk reward ratio. So for today, I'd be looking at 312.50 as a very, very important level. Now, moving on quickly, affirmed, sitting on a $15 gap, right at 85. Alarm that level. You get a break below, I think you're going to see a quick move down to 70. So that's a trade about to happen. If there's a bounce today, great. Give you a chance to, set your alarm and get set up for that move. I believe that gap will fill. And then if you're short and things fall apart, you can do one of two things. You can cover on the gap fill in anticipation of a bounce, or you can roll your strikes down, take your profit, stay short, and see if you can get a move down to 57.50 if this 70 line breaks. So anyways, a couple ways to play that, but big gap to fill there on AFRM. And then let's quickly go through ARK really fast. Here's the FinTech. Set yourself an alarm at 39. I would be getting short on a break below. Genomics. Set yourself an alarm at 57.50 or maybe just above, depending on how cute you want to get it. I think 57.50 is fine. You get a break below. I think you got, at a minimum, $7 or $8 of downside and probably a lot more. This to me looks like an impulsive leg down, a consolidation, and then if you get a breakdown here, you get a next leg down. ARK flagship. Bearish regime on PPO, bearish regime on RSI. Watch for that bear cross. I would have 90 alarmed in your system for a downside break. And as we talked about before, ARKK has a lot of Tesla in it. And if Tesla moves into that big gap below and you don't really want to get into, $1,200 options on Tesla, you can use ARKK as a proxy and then get short against 90 on any kind of breakdown. And then wrapping up with ARKW, I would have 115 alarmed in your system. Big impulsive move down. You've got a nice downtrend line that's being respected all the way down. I think if you get a break below 115, the price will see a lot more downside. And if you want to look at potential targets, you can always go to the weekly chart and see where support comes in, and then that can be your target on a breakdown below 115. Let's wrap it up there. Don't forget about the FOMC minutes at 2 o'clock as a potential catalyst. Also on the blog this morning, in addition to all the ARK charts, I've got Freeport-McMoRan that's setting up really nicely for both short-term traders and traders with much longer time horizons as price gets set up for a multi-month breakout. And I've got the levels marked there and some trading ideas for you. So have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.